So for those of you that have not met me, my name is Jonathan Weiniger. I've been with the State Board of Accounts since 2003. I worked in the southern part of the state as a field examiner until February of 2019, and that's when I joined the director's unit up here in the office. So I hope some of my experience out in the field has been an asset to Chase. I think we work as a pretty good team up here, and I look forward to meeting more of you when we get back to doing some in-person meetings. So this presentation I'm going to talk about I've titled it the Enhanced Regulatory Reporting. I'm going to get into it, what it is and why we've considered it to be needed. The purpose of the changes we're trying to be proactive to report similar to GAAP requirements. And for those of you that do not know what GAAP stands for, it's Generally Accepted Accounting Principles, and it refers to a common set of accounting principles and standards and procedures that have been developed over many years for common industry usage. The purpose of enhancing our audit reports are to satisfy legislators and bond rating companies that review the reports and then provide bond ratings for these governmental units. Legislation has already been passed requiring certain units to report financial statements in accordance with GAAP. This is based on population for cities, towns, and counties, and the average daily membership for schools. The effects of GAAP reporting, there would be many more financial requirements for units. Many townships may need to outsource or hire accountants to comply with the additional audit requirements. It would take more days to audit, so subsequently there would be additional audit costs to units. So as I said, at State Board of Accounts, we're trying to be proactive and enhance our audit reports on the regulatory basis to satisfy the readers of those reports and to minimize the additional cost to the units.
Someone wants you to speak up a little bit.
Okay. Some of the items to get the enhanced regulatory reporting, we had to add some additional unit questions to the AFR. Here's a couple of those questions. Does your unit provide other post-employment benefits to employees? And did your unit make interfund transfers during the year? So you should have already have answered these when you completed your 2019 AFRs. They will continue to be part of the AFR. I did want to note, we did send out a memo titled Enhanced Regulatory Delays on April 27th of 2020. And basically, during this time, to be able to serve you and to satisfy our statutory responsibilities for audits during the public health emergency, we have decided to postpone implementing some of the enhanced regulatory reporting requirements. So for the audit years 2019, they will be based on the regulatory basis of accounting in place for 2018 and will not include the enhanced regulatory basis of accounting updates that we had scheduled for 2019. This will not cause any additional work for you, and the townships will not be required to take any further action. This decision will reduce the testing requirements and the number of types of records needed by our field staff. And we also had updates that were going to be implemented for the 2019 annual financial report. Those will still be required in the 2020 annual financial report that will be due on March 1st of 2021. So continue to maintain all of that information. You can also go to our website for the 2019 annual financial report that had the schedule of the regulatory changes. Also, we had additional enhanced regulatory requirements that were scheduled for 2020, which would have been implemented through information submitted in the 2020 annual financial report that would be due March 21st. Those have been postponed. We are not anticipating any major changes to the 2020 annual report format. We regret these delays, but during this time that we are all having to work in, including the need to limit physical interaction and maximize remote operations, we determined that now is not the best time to implement these enhanced regulatory requirements. So I am still going to go over some of the enhanced regulatory reporting requirements and the changes that were made in the 2019 AFR, as well as some of the changes that were going to be made in the 2020 AFR. So some of the changes made to the 2019 AFR, which you have already encountered, the debt and capital asset schedules, they were going to include the beginning balance, additions, reductions, and ending balances, where in the previous AFRs, all you had to report were the ending balances as of the end of the year. Long-term debt, under the enhanced regulatory reporting, this is going to be presented as a note to the financial statements. Notes are considered part of the financial statements, so an audit opinion would be issued on those. In the past, it's been a supplementary schedule, and in a supplementary schedule, we do not have to do audit procedures, and we do not put an opinion on those items. So for long-term debt, it will also include beginning balances, additions, reductions, and ending balances, as well as a schedule of principal and interest payments until maturity. Leases, information on leases were also going to be included as a note to the financial statements. That note was going to include a description of the lease and the term of the lease, and it was also going to include a schedule of principal and interest payments until maturity. This is a list of some additional note disclosures that were going to be reported under the enhanced regulatory reporting requirements. Interfund activity, that was just providing note on the transfers from one fund to another and the purpose of those transfers. Significant contingent liabilities, that was an example of something like that would be if a jury awarded a former township employee an alleged wrongful termination, or if a significant commitment such as a contractual obligation to purchase a fire truck during the year. Those were all going to be additional note disclosures that we are going to require in the enhanced regulatory reporting. A couple other additional note disclosures were pensions and other post-employment benefits. You'll often hear us refer to some of that as OPEB, which is healthcare and vision benefits for retirees. For a mock report of the 2019 regulatory reporting requirements, I've included a link here. You can copy that into your web browser and go review the reporting requirements that we're going to be input into the enhanced regulatory for the year ending December 31st, 2019. Capital asset activity, it's going to be reported as supplementary information for the audit period ending 12/31/19. Like I mentioned earlier with the debt, supplementary information is any information presented in addition to the financial statement that is not considered necessary to fairly present the financial statements. So in the past on capital asset activity, and as well as in 12/31/19, capital assets was going to be reported as supplementary information. We were already giving an additional year to gather all of the capital asset information because we know a lot of units, this is an area where the capital asset records are not in the great shape, so it would have given an additional year already before we actually put an audit opinion on those. So properly maintaining capital assets. We get several questions on maintaining capital assets, so I was going to detail today a training on how to properly maintain those capital assets. So first we need to define what is a capital asset. Well, GASB, which is the Government Accounting Standards Board, it creates reporting standards for state and local governments. They have defined capital assets as the term capital asset includes land, improvements to land, easements, buildings, building improvements, vehicles, machinery, equipment, works of art and historical treasures, infrastructure, and all other tangible assets that are used in operations that have initial useful lives beyond a single reporting period. So I don't think anybody has any questions about land or improvements to land or buildings, vehicles, machinery, and equipment. Those are pretty clear, but we get a lot of questions on what are infrastructure assets. Infrastructure assets are long-lived capital assets. They're normally stationary in nature. They can be preserved for a significant number of years over most capital assets. And examples I often provide are roads, bridges, tunnels, and drainage systems. So I don't know how many townships will have infrastructure assets, but I'm sure there will be a few that do. Another thing I just wanted to touch on is construction in progress. Basically, this is where work has not been completed in the current reporting fiscal year. An example of this would be, say, a firehouse started being built in October of this year and it wasn't completed until January or February of next year. The amount that had been completed would be reported as construction in progress as of 12/31 of the end of the fiscal year. So once the construction is then completed, the amount recorded in the construction in progress would be moved to the appropriate category, whether it's buildings or improvement of other than buildings. So to properly maintain capital assets, it is a requirement that the township have a capital asset policy. The policy is required to detail the capitalization threshold. Capitalization threshold is a management decision. We get a lot of calls on what do we recommend. Since it is a management decision, we typically do not recommend a dollar amount, but I do let officials know that for federal grants and some federal requirements, I believe the federal threshold for capital assets is $5,000. So if they do not want to have to worry about two different thresholds, they could adopt the same policy as the federal threshold. Some other items to consider when adopting your capital asset policy: who is responsible for maintaining the capital asset ledger, any other procedures and internal controls that are being implemented to ensure that the person maintaining the capital asset ledger is receiving all of the information that they need to properly maintain the capital asset ledger. Useful lives of assets. This is something that I have added here as I get into it later. Townships are going to have to start tracking depreciation, and so to be able to do that, they're going to need to set a policy for useful lives of assets at a minimum by category, and they need to be consistent with each type of category. And then how to account for depreciation in the year that it was purchased. And I will get into more details on that in a later slide. State Board of Accounts has prescribed General Form 369, the capital asset ledger. We get a lot of questions on whether it may be maintained electronically, and we answer yes. Our answer there is the form may be electronically duplicated, or it may utilize another format, but the key here is it must contain all of the same information as the prescribed form and the function that is required by the prescribed form. Here's a sample of the capital asset ledger, and I'm briefly going to go through several of the columns on the capital asset ledger form. The first column is the date of purchase. That's simply the date the capital asset was paid for or possession was received. Description of asset. Just be detailed here. Don't just list fire truck. Be specific. An example I always give is put the year, like 2019 water tanker or 2019 pumper truck. Be as specific as you can in your capital asset ledger. The serial number, it may not always be a serial number. For a lot of vehicles, it's going to be a VIN number. It should just be a number that is specifically identifiable to the capital asset. The original cost of the asset, this is the historical cost. The cost of the capital asset should include capitalized interest, freight, transportation costs, and professional fees. I also want to note that donated assets should be reported at their estimated value at the time of acquisition. Estimated life of the asset, this is just how many years do you expect this capital asset to be in use. The date of the disposal of the capital asset, this is the date the capital asset was traded or sold. And the amount received on disposal of trade-in, this is the cash that was received when sold or the credit amount received when traded in. And then I just want to touch on, I've covered most of the items under the types of capital assets, but I didn't note books and other. Books will be mainly used by libraries, and other will consist of any capital assets that do not fall into the specified categories. And then the very last column is total capital assets. This should be a running total of all capital assets. So I know many of you are thinking the problem is not with the current purchases and finding the amount to report for capital assets, but it's on items that were purchased many years ago. We have provided some guidelines to assist in determining the historical cost of items when you do not know the exact value. First thing to do is develop an inventory of all capital assets owned. Then determine what you have the historical costs for, and then you would need to obtain an estimate of the replacement costs for those that you do not know. Estimated replacement costs can be obtained possibly from an insurance company. If replacement costs are not available, you can make an estimate of those replacement costs and maintain the documentation that you've used to support the estimation. Determine the year of acquisition. If you do not know it, you may be able to review any board minutes, inquire of some board members, maybe inquire of a former board member that was on the board at the time you think the purchase may have been made. Once you have done that, you can then multiply the estimated replacement cost by the factor for the year of acquisition from the table of cost index. We have updated that in our September 2019 bulletin. So you can copy that link into your browser and it's going to pull up the table of cost index. So an example that I've created, a fire truck. It was purchased for, we've determined the replacement cost would be $200,000. And we were able to determine through looking through the board minutes that it was purchased 15 years ago. So I would take 15 years off of 2020. So that would be 2005. And then when I pull up the table of cost index, the factor there is 0.78. So I would take 200,000 times the factor, which would be 0.78, and that would give 156,000. And that would be the amount that I would use for the capital asset ledger form 369 that I would record that as. And I would keep all of that documentation to support that figure. So by properly maintaining the Form 369, you should be able to get the beginning balance of each capital asset, the additions, the reductions, and the ending balances from that form. And that form should be able to be used to support the amounts that you enter into Gateway for the AFR portion. We also have training videos for the capital asset video. We have developed an SBOA YouTube channel, and I have the link to the YouTube channel there. And specifically, I have about a 10-minute video on capital assets, a lot of the information that I went over today. So if you have any other questions on that or just want to review, you can look at that video through our YouTube channel. Like I said, one topic that I have never covered before in any trainings, I don't know that we've touched on it before at all, is depreciation. The plan was accumulated depreciation was going to be reported in the AFR for the year 2020, but like I said, that has been postponed. But we still do plan on implementing that at some time. So I recommend going ahead and getting started on calculating those amounts, and I'm going to go over a little bit what is depreciation and how to calculate the accumulated depreciation. So depreciation, it's an accounting method of allocating the cost of tangible or physical assets, such as buildings, equipment, infrastructure, over the life of the asset. And accumulated depreciation represents how much of an asset's value has been used up. And like I said, accumulated depreciation, at the time, it was going to be included as a part of the capital asset note disclosure in the 2020 financial statement, so therefore we would have been putting in an audit opinion on that note disclosure. However, it has been postponed. What assets can be depreciated? There's two classifications. One is depreciable assets and the other is non-depreciable assets. Your depreciable assets are buildings, improvements other than buildings, any machinery, equipment, and vehicles that the township may have. Items that we consider non-depreciable assets are land, because we assume that they have an unlimited useful life. And then construction in progress, those are assets that haven't been placed into service yet. So you would not depreciate land or items listed in construction in progress. So there are multiple methods for determining depreciation calculations. That would need to be adopted in policy by the unit. I'm going to go over one method here today that I think is one of the simpler approaches. But basically you have the asset value at historical cost. You've determined the estimated useful life. So you take the asset value divided by the estimated useful life, and that is going to give you your yearly amount of depreciation. So an example there would be, say a fire truck was purchased for $100,000. If you estimate the useful life of that fire truck to be 10 years, then you take 100,000 divided by 10. So you would get $10,000 as your yearly amount of depreciation. And then your accumulated depreciation would be the total depreciation to date. In determining your accumulated depreciation, you must maintain a documented basis for the asset valuation and the estimated useful lives. So that's where I recommended that the estimated useful lives could be included in the capital asset policy. That way you can go back and review it as needed to determine what the estimated useful lives have been determined for each category of capital assets. So this is kind of a proposed note that we were planning on having in enhanced regulatory reporting requirements for the 2020 audit report. Basically, the top part is the capital asset note, and then I'm going to get into the depreciation amount there. So for beginning balance for each capital asset, you will determine the yearly amount of depreciation, which I went over on the last slide there, where we determined that fire truck was purchased for $100,000 and it has a useful life of 10 years. So say if the item was purchased in 2017, you would take, for our policy, we are determining that the depreciation is going to occur during the year it was purchased. that is a decision that will also need to be made by the unit. So you take the 100,000 divided by 10, gave you the $10,000 yearly amount of depreciation, and then you would need to multiply that by 3 years, as you have 17, 18, and 19. So that would be your beginning balance that you would use for the accumulated depreciation for the fire truck. Then the $10,000 would be an addition in the current year. And the only time that you would use a reduction in accumulation is when the capital asset is disposed of. So after you determine the accumulated depreciation of each piece of equipment for a beginning balance, then you would need to add those together, and they would all go under each category under the beginning balance. And then the yearly amount of the depreciation would be your addition. And the only time you'll have reductions in accumulated depreciation is when you dispose of the equipment, and then that should calculate your ending balance. And you should be able to then report that in Gateway, and then we would be able to generate this capital asset note. I do know there are going to be several questions related to capital assets and determining accumulated depreciation. So as townships, as you guys start to accumulate these figures, feel free at any time to give Chase or myself a call, and we will be more than happy to assist you in any way that we can. So that is all I have on the enhanced regulatory reporting. Are there any questions?
Yes, I have several.
Okay. I thought there might be.
Before I go through these questions, at the beginning of the the conference, I said we could use both the chat and the Q&A if you'd like. And as I've been working through these and answering the questions, it's much easier for me to identify your question in the Q&A because it looks orange if I haven't addressed it yet, and then it turns blue once I answer it. So if you do have any questions, please put it in the Q&A instead of the chat. But here are the ones that I have pulled out when Jonathan was presenting. Questions about TA1 forms. A lot of those forms, we don't necessarily need them after we do your audit, but you need to look at the IARA, Indiana Archives and Records Administration. They have a retention schedule online, and that'll go through the process and the time period of the records that you have and when you can dispose of them. The township boards have to approve policies each year. They don't have to approve policies each year. If you have changes, I'd recommend that you run them by the board to approve. But since it is a township policy, when you do implement it, the board should be approving those, along with the trustee proposing it. A question about where do you find the cost for audits. On our website, if you look in the left side, it's about, and our fees and rates are listed there. You can go to the website. We have the statutes posted on our daily rate and then our full cost rate as well. Here's another question. Will there be internal control exceptions for working remotely during COVID-19? Our normal processes are harder to follow with the office being closed and staff not allowed on site together. So I have heard the state examiner say we will take into consideration the public health emergency and what COVID has done to your office. We will understand if you don't follow your internal controls as closely as you used to in the past because you're not working in the office and things like that. But that's also why you should have a COVID policy and note in that policy how your operations are changing. And at the end of the day, Jonathan's going to go over a couple of memos that we talked about, so we'll hit that later. And we got a lot of cemetery questions. You just want to address kind of general how cemeteries should be accounted for?
Yeah, we've established a policy on cemeteries. Basically, cemeteries, if they are owned by the township and they are in the name of the township, they should be recorded as a capital asset as land. There wouldn't be any when a person purchases a plot, they are purchasing a deed there, but it is not a deed for the land. So the land would just be reported as the original historical cost of the cemetery.
Yeah, that's a good answer. What about valuation of cemeteries?
For the valuation, basically you would just determine your land. You're not going to have any depreciation. So if you can determine a value the best you can of the land and then take it back, estimate it to the cost, you could do it that way, but however, it's non-depreciable. So as well as you can estimate what it was purchased for at the time of possession by the township is what it should be recorded at.
And we had a question about the valuation of cemeteries and historical costs. Can you go back to the slide and just do that one more time? I think that'll answer that question.
So basically, land probably went up, so you're gonna have the replacement cost. You're just gonna determine the value of the land, and then you would have to determine the year of acquisition. And then you would go to this table of cost index to determine your value of the land.
Yeah, we have the bulletin linked there in number 4. So if you do have questions on that, read through the bulletin, and then if you have questions after, then you can reach out to us. So I see some other questions coming in, but I want to stay on schedule. I'm respectful of all of your time. Don't want to keep you longer than needed. So I'll have Jonathan go through and start answering some of these, and I will start on the next part of the presentation on township compliance.